I'm Rick Kaler, and thank you for joining me. South Dakota has no individual or corporate income taxes. I'm really quick to point this out to those unfortunate enough not to live in our fair state. Most recently, I was reminded of this advantage when I calculated a California client's taxes, and that they would pay 23.8% in federal capital gains taxes and then another 13% in state capital gains tax, a total of almost 37%. Unfortunately, my claim, though, of South Dakota having no corporate income taxes, I have found out is really somewhat incorrect. If you choose to be in certain types of businesses in South Dakota, you do have to cough up a percentage of your net income to the state. Cleverly, we just don't call those income taxes. The first of these taxes is an energy minerals severance tax of 4.5% imposed on the extraction, which would be the mining or drilling of resources such as oil, coal, and uranium. We also tax banks at a rate of 6%. This is called a franchise tax, and it only applies to banks. So why are banks singled out? Well, the official explanation is the bank franchise tax was a replacement in 1939 for what was termed to be a tax on money and credits. I'm not sure, but my guess is that it was an unspoken punishment on banks who were seen by some as the villains of the Great Depression. Can't be sure, but that's my guess. It started out at 3% of net income, and the legislature has increased it 3 times, most recently in 1979 to the current rate of 6%. Now, not only do banks compete with one another for their share of deposits and loans, they also compete with credit unions. Unlike banks, credit unions don't pay the South Dakota franchise tax. Now, not only do credit unions not pay the South Dakota franchise tax, they also don't pay any federal corporate income taxes, which, by the way, are the highest in the world. A profitable South Dakota bank will pay over 40% of its income in state, franchise, and federal income taxes. A nonprofit South Dakota credit union pays 0. Nothing. Nada. Now, clearly, don't you think this puts South Dakota banks at a competitive disadvantage against South Dakota credit unions? Well, why this huge discrepancy? In the beginning, credit unions served specific groups of people with limited means. The tax exemption was more of a charitable exemption, as credit unions were not for profit and didn't offer the range of services that banks did. Now, over time, that has changed significantly. Today, credit unions are open to a broader group of consumers. I am even a member of a credit union. They offer a wide range of financial services and products, including commercial loans and investments that compete directly with banks. In some towns, the local credit union is larger than any commercial bank. Well, not surprisingly, for many years, the banking community has pushed for the end of the credit union tax exemption. President Obama's 2014 budget estimates that eliminating the exemption would raise an additional $2.2 billion for the federal coffers. But still, consumers love credit unions, where they often can earn a little more on savings accounts and CDs and borrow at lower rates than at banks. If the tax exemption on credit unions is eliminated, most certainly customers, like myself, will see lower earnings on deposits and higher rates on loans. This is precisely the point that the banks make. The tax exemption is really nothing more than a government subsidy of their competitors. That was really never the intent of the original legislation. Well, the banks call for the elimination of the exemption. Another option would be to eliminate the corporate income taxes on banks. South Dakota could lead the way by either eliminating the franchise tax on banks or implementing one on credit unions. Either way, it would level the playing field. So as the differences between for-profit banks and nonprofit credit unions disappear, it really would make sense for them to compete on a more equal basis. Thanks for listening.